Now I will walk you through my Edgewonk journal, how to set it up for trading our strategy. Of course, if you are not an Edgewonk customer, you can still always track the data I track here in your own spreadsheet. That is entirely up to you, but let's take a look at my setup. Firstly, the instruments. There are a lot of instruments I trade, as you can see here in this list, 22 instruments at the moment. These are exactly as many charts as I can fit on my 27-inch screen. As you can see, all the majors, some minors, no exotics, and gold. So for the setups, this list is also in various places in the forum, where you can simply pause the video. Setups. Those are interesting. If you already finished the class before watching this video, then you can probably guess that DCD stands for drive, channel, drive. So we have a drive, channel, drive, breakout, DCD inside structure, DCD simple pullback, structure breakout, and structure breakout and retest. Let's take a look at examples for each of these. DCD breakout. The DCD breakout is my favorite setup because it trades tremendously well. It's basically a drive, channel, drive, but the thing about this one is that our entry setup coincides with the breakout of the channel. So for example, we have a bear flag here, and our setup for entering when price bounced off this pivot and the 142 round number at the same time was this candle here, and you can see this candle at the same time broke out of the structure. Fake breakout here, but we didn't get in because our stochastic indicator was in a bad position. You see, it pays to wait for the right conditions. Then DCD inside structure simply means that the trade triggered while we were still inside a structure before the breakout. We have that right here. As you can see, after our breakout from this bear flag, we had a drive up. Then we had this horizontal range here, this consolidation with a double top, another double top inside that range actually. And then we've made a fake breakout to the bottom and bounced from the pivot and this consolidation over here. And then we came back into this range. We could have gotten in here or here, and then as soon as price gets up to the top and around the pivot, we can move our stops. So you can see the trade triggered while we were inside this consolidation and we didn't break out yet, but the breakout happened shortly after. That's DCD inside structure. Then we have the DCD simple pullback, which is simply a pullback, as the name says, without any waves in it. For example, this one here. Yeah, there are no waves inside this pullback. We simply wait for the structure to break to the downside and get in. Then we have the structure breakout, which is a setup that is not preceded by a drive. For example, down here we have the head and shoulders, and the head and shoulders is one of my favorite structure breakouts because it serves so well for our purpose. We can get in at the right shoulder or at the break of the neckline. This is a structure breakout setup. As you can see, there is no drive preceding this whatsoever except for a down drive. And then we get the reversal structure and up we go. Last but not least, the structure and break retest. Simple. After we broke out of the structure, we retested it. So retest number 1 here of this high, retest number 2 here of the whole structure itself, of this double top, and we can get in here. Okay, entry, exit and trade management. I don't have much here. For the exit comments I use good, too early, too late. Same for the entry, good, too late, too early. And trade management, good according to rules, or broke rules, gambling. I always put gambling behind entries where I broke my rules because I want to remind myself that whenever I break my rules, I'm trading outside of the statistical set, which is my system, and then it's basically gambling. As for the alternative strategies, I also talk about these in another video. These are the ones I'm testing at the moment. These change periodically. If I find a strategy inferior to my actual strategy I'm using at the moment, I will kick it out and test something else. So set and forget, take profit at the next pivot. Set and forget at 3R, break even at 66%. Trail stop loss distance, so every pip price moves in my direction, I trail my stop loss 1 pip. And follow the M15 stock, so when the M15 stocks crosses in the other direction, we get out. Finally, the custom stats, very important. Firstly, I check the trend, up, down, not with the trend, yes, with the trend. Of course, for us, with the trend always performs much better. Usually the only counter trend trades I take are head and shoulders, and whenever I take other counter trend trades, I don't do too well. I want to know which pivot performs the best when bouncing from it, and actually the daily pivot performs the best so far. Session, of course, which session is on at the moment. Here it's also very easy to see patterns that Frankfurt plus London plus New York perform the best for me. So I look for the majority of my trades during those hours. Do we have a local trendline break? Yes or no? So if we have a local trendline break, this often enhances the odds of our setup working out. We don't have the luxury of always having this, but if we do have a local trendline break, then most of the time it is a really nice setup. Okay, take this one for example. We broke this trend line. We broke above this high. We came back down to the trend line and to the pivot, and then we bounced once more and we broke through this, which is a local trend line. We broke through it and then we took off. Whenever we have a local trendline break, I am watching closely. Accompanying structures, these are all the structures I look for. I also talk about these in another video, but yeah, these are all the structures I look for. What else did price bounce from, except for the pivots? Usually if I have 2 here and a pivot, then it's an amazing trade. So if I have support plus trend line, plus a pivot for example, plus a local trendline break or any of our accompanying structures, then we have incredibly high probabilities of the trade working out. And yeah, if you want, you can only wait for support plus trendline, for example, or resistance and trendline and a pivot, and you will make great trades. Bounce from the round number, if this comes in as well, then quadruple A trade. But usually 3 factors are enough, as I said. Okay, 3 factors are what I'm looking for usually. News. Did the high impact news happen during the trade? Was there no high impact news? Or was there high impact news within 30 minutes of opening the trade? Which is against my rules actually, and I don't want to do this. So trades with this usually don't perform too well. If the news happens during the trade, so for example I'm in a trade for 2 hours already and it's running, and then the high impact news come around and I'm in a plus, I usually move my stock to break even or reduce my risk substantially, and these perform usually really well. I like this one the most. Last X trades a loser, question mark. So for 1 or 2 losers, no problem. 3 or 4 losers, I'm already losing a win rate. For 5 to 6 losers, I am in a really bad mental state usually. And I should stop trading for the week, at least if I get 5 or 6 losers in a row, which is not uncommon. I mean, it happens with a 50 to 60% win rate. This does happen, and to avoid decreasing my win rate even further, I stop trading for a few days, and that works well for me. Okay, that's it so far. I will export my settings as well and upload them to the internal forum so you can download them and import them into your H1 if you want to track the same stuff as me. Identifying your flaws. Trading is an uphill battle against the self. Each one of us has a different psychological makeup, and changing that is almost impossible. First, you have to be brutally honest with yourself. You have to be able to analyze yourself with incredible honesty, and you need a self-reflection ability which is almost not existent in any of us, because in school we are not taught to be self-reflective. Society doesn't really teach us how to do self-reflection. What can we do about this problem that actually trading is against human nature. There is definitely no one-size-fits-all solution, but there is an exercise which helped me a lot with identifying my flaws and with fighting them, or rather turning them into minor problems in my trading. I can now easily identify them, isolate them, and act upon them whenever I see one of those come up, but most of the time I am able to contain myself. I did all of this with the self-observation exercise. You observe yourself loudly while you are trading. So you describe what you are doing, what you are thinking while you are trading. And basically you look at yourself as if you were standing behind you. You observe yourself trading and you listen to your mind, you listen to your thoughts. You explain everything in a loud and clear manner while you are trading. And if you want, you can even record that on a camera and watch it after the session. And it will be incredible what you are going to see. You are not going to believe yourself that in front of the camera is you. You'll be like, what the hell is this guy talking about? What is he doing? That is not me. Yeah, and actually that's what happens to a lot of us when we are governed by emotion. The third body experience is nothing new. It happens to murderers, for example. While they affectionately murder someone, many of them, after they get caught by the police, they describe the experience as an out-of-body experience. They watched themselves do it, but they had no control over it. And this is what happens to many of us while we are trading. Completely governed by emotions, unable to control ourselves. But it doesn't feel like that in the moment. Only after we realize what was going on. So in order to identify these states of mind, we need to talk to ourselves and record it if you want. And then whenever we realize something is coming up, we have to act. So we take a notepad, we scribble down whatever emotions we felt during the session, during which circumstances, and then we review it after the session. Then you will get a list of all the flaws you have to deal with. Impatience, anger when you miss a trade, anger when you exit too early, anger when the trade hits your stop loss and then takes off without you, boredom, getting in on a trade because you want the action, not you because you want the profit, and so on. And observing yourself will become an automated process after a while. I always imagine that behind me my mentor is standing, who is watching over my shoulder, and I would feel very embarrassed if I made a grave mistake, and that helps me a lot already. One way to deal with these things is that you simply stop trading when you identify one of these weaknesses coming up. For me, for example, there was every time I exited a trade too early and it took off without me, I became incredibly angry and I would try to chase the trade, or I would get in on the next setup way too early without confirmation, or I would ride the next setup out until it hits my stop loss, although there were clear signs that I could have exited before the trade hit my stop loss, and so on. So what I did in the beginning was that whenever I felt these feelings coming up, or whenever I identified that I had made a mistake which would induce those feelings, I would already stop trading before those feelings even came up. But then I had a problem after a while because I'm a day trader, and as a day trader, if I don't trade, I don't make money. I need to sit at least 4 to 6 hours every day in front of my screens in order to get enough trades in to produce a certain sample size in order to turn a profit by the end of each month. The solution to stop trading when identifying one of these weaknesses worked really well in the beginning, but in the end I had to choose another route. I had to work on my C and B game. I had to minimize the impacts of these flaws. And I did this again by the self-observation exercise. Whenever I identified making a mistake, and I have to say, like, making the mistakes I made that brought me these bad feelings, I made less and less of these mistakes as I became better and better with my strategy. So the flaws became less and less. With less and less flaws, my emotional problems became less and less as well. But trading is trading, and sooner or later the market will get to you. And in order to minimize the impacts of these emotions, I had to, again, observe myself, describe my feelings very clearly to the camera, and then analyze after I finished this trading session what went wrong. And I had to develop some techniques like breathing techniques, breathing deeply during the trading session, getting my mind back on track, admitting that I made a mistake, but that the next trade would be completely uncorrelated to the trade before that, So I had to remind myself of the facts, of the statistical facts of trading. I had to remind myself that one trade is nothing in the great game, that I take around 40 trades a month, 500 trades a year, and that one trade would be nothing compared to that. And then for every flaw I had a counter argument. I had to think long about these counter arguments, but for every flaw I had, for every bad feeling that came up inside me, I had a counter argument that makes a lot of sense to me. And now I have no problem countering these bad emotions when they come up. Actually, it happens automatic. I can identify these emotions very quickly. I know where they come from. I know why I feel like that, and I know what to tell to myself in order to calm down. And another thing that helped me a lot was seeing the correlation of my flaws, black on white, with edgewonk, for example. I put a filter on edgewonk that every time I open a trade due to bad emotions, once I saw black on white how much money this was costing me, it was much easier for me to remind myself of that. While I was in a session, I was simply thinking of my equity curve going down like crazy for all the trades I took due to bad emotions. And every time I reminded myself of that, it was much easier to control myself as well. So once you work on your flaws and see the progress, and you see how much money your mistakes are costing you, it will be much, much easier to remind yourself that your arrogance and your ego are costing you a lot of money. It will be much easier to fight your ego then, or to deal with it in a grown-up manner. So once again, try the self-observation exercise. Let me know your results. If you have any question about this, simply ask me on the forum. I have a master in educational psychology, so I can probably help you out a little bit on that side. Most of the time, if you have an outside person look at what your problems are, it's much easier for them to tell you what is going wrong, where you are wired incorrectly, and where your brain is controlling you. And yeah, I would be happy to help out. So simply go to the forum, let me know what you feel during your trading after doing the exercise, and we can work together on fixing it.